Hello everyone and welcome to Day Trader S&P 500. Today is July 22nd, 2022. It's about 10:30 a.m. during market hours. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. I want to cover the Qs, US 10-year, got a little notice on gold, S&P 500 cash, and the ES futures. I want to let you guys know we have Auto-Trade my signals with Striker Securities, and there's the information there. While I'm not a trading service per se, Striker will auto-trade my signals. I want to show you what we're setting up here. It's called measured risk projected rewards. Let me see if I can get into one of these here. Okay, so what we do is if this is our target here, for example, we would go long somewhere in here, put a stop below there to where our loss is very small and our gain is very large. If it hits our target here at 40.35, we would go short right near there with a stop just above, and then the target should be way lower here. That's the measured risk projected rewards. Wanted to let you guys know about that. Again, that's with Striker Securities futures brokerage. If you were interested in that, you would open an account with them, and then they auto trade my signals, or they trade what I trade. Okay, let's get into the Qs. Okay, this is the daily chart of the Qs. You can see we've got one down here with a circle, two up. There's three. There's four. This looks like one of five, and you can see the retracement. It hit up here near the 618, and now in the last few days it's gone to the 786 retracement. Okay, if this is one down and two up, then two should not go above this high, which is the 314.56. Okay, right in there. So we'll be watching that. That should be one of five, then two of five, then three, four, five. If it goes above here, then it's not one of five. We'll keep watching that. I want to look at the US 10-year, zoom in a little bit here, and you can see we've got this fifth wave up. There we go. There we got a little higher target also, a couple higher targets. There is four, and this is a fifth wave up. You can see it's coming down from there. If that high is the high right there at 3.497%, this is a daily chart of the US 10-year. Then it'll go down to these targets here, the 382 at 1.425, or the 500 at 1.080. And that is within the fourth wave of one lesser degree. You see three here and four here. So that'd be a nice landing spot for it. However, we got to watch this closely because we have higher Fibonacci targets that it could go up to. You can see them right there at 3.576 and 4.434. So we'll have to watch this as we are on a smaller scale than daily, but I just want to let you guys know about that. And the traders make the interest rates, not the Fed. The Fed follows the traders, but we've known that for decades here. Okay, let's move on to the S&P. Here's a daily chart of the cash S&P. You can see we have 5 waves down. That makes this A in parentheses. 3 waves up to make that B in parentheses. Then 5 more waves down to make the C in parentheses, which makes the larger A with a circle. There's 3 waves up for B, and then we start the process again. 5 waves down for A in parentheses, 3 waves up for B in parentheses, and then we should get a C down to make the larger C with a circle, okay? And this B up should be 5 up, 3 down, 5 up. We have the 5 up for that A, that red A with parentheses. We have 3 down for the B, and we're looking for 5 up, and it looks like it's all but in. It may happen today, it may happen next week, it may have happened earlier, it may fall short of target. You can see our target there is C equals A at 40.31 in the cash, and it made a high of 40.12.44 so far today. It may do it today. It could hit this 786 retracement at 40.62. It should not go above this 41.77 high. That's where we always say, where am I wrong? That's where we're wrong. If it goes up there, then this can't be this B and this C. It is something else, okay? We can do the same, and let's see if we can get down a little tighter here. We don't want to do that. I wanted to show you, I think I might have it in here. let's see if I got that C target. Yeah, I've got it right there. 3166 is where this larger C, when this is an A down in parentheses, B up, when it's over, it's complete or nearly so, then C down to gain equality with A is at 3166. My apologies for these things. They're hard to stick right on there. Okay, so that's the S&P. Let's get to the ES, the futures, E-minis. Again, the same thing. 5 down for A, 3 up for B, 5 down for C, which is the larger A, 3 up, and then we've got the A, B, C. Okay, this A up is 5, this B down is 3, and this C up should be 5 to make the larger wave B, and that'll get us down to the C wave. I don't have that C wave in there, but the larger C, that target is 3201. Okay, this target here we're looking at for 4035. I may have that on a shorter term to just look at this from this A wave low. Let me see if I have that on the hourly. Yeah, I do. There's that A wave low. There's 5 up for this A, and there's 3 down for that B, and then we're looking for 5 up. You can see our target is 4035. That's where C gains equality with A in the futures, and it got up to 40.16 this morning, and then it has sold off. So is it going to fall just short and sell off into this larger C wave down or not? We'll have to watch that on a much smaller scale than hourly, and that's what I'll give to our monthly subscribers. So that's the hourly there. Let me see. I think I have some picks for you. Oh, I wanted to talk about gold. Yeah. Gold, this is a daily bar. This is going back to the 2015 December 3rd low. We have a 1 up, a 2 down, a 3 up. We just put this out to our annual subscribers yesterday, which the gold market is covered in. All right, then we had a 4th wave correction, an A down, a B up, and a C down. Okay, by the way, this is not correct at 1.618. Anyway, we have like a triple low here. We had 1678 in March of 21, 1681.95 in August of 21, and yesterday we had a 1681. That makes a nice ABC for 4. 4 could still go lower. The Fibonacci 500 or 50% retracement is 1619, and the 618 retracement is 1510.94. Where can this 4 not go? Where is it wrong? It can't go below the wave 1 high at 1375.16. That's why that is the make or break. The wave 5 targets for gold are up here from this low. Obviously, if it makes a lower low, which it can, that will lower these targets. As far as these targets are concerned, that 1.00 is not above the wave 3 high. You can see that's 2075 and that's 2009. So we expect 5 to at least go to a 1.212 or a 1.414, or more likely the 1.618, which is 2212. Okay, so there's our downside parameters. If this low holds, there's our upside parameters. If this goes lower, those change. Okay, that's it on gold. Let me see if I have another one here. I may have this. This is the same thing we just saw, and this was yesterday's report. It was 40.04 as of 3 p.m. Central yesterday, and we can see it went from there up to that high. So that's what we're looking at here. We're looking, this larger B wave here is complete or nearly so. It's at least 95, if not 99 or 100% complete. Ideally, in a Fibonacci perfect world, C gains equality with A at 40.35, and then it starts to sell off into the larger wave C down. Well, we'll see. We got to look at structure here. We got to see 5 waves up. Again, it's a 5 up, 3 down, 5 up, and this thing extended or subdivided. You can see it there. I won't get into the individual counts. I'll tell you guys what you can do if you're new to Elliott Wave or you're having trouble counting, which a lot of people do. If you're looking for 5 waves up and waves extend like this one has, it's not just a clear 1, 2, 3, 4, 5. You go in multiples. It's 5, and then impulsive waves are 5 waves up or down, then 9, then 13, then 17 onto infinity. These corrective waves down, they're 3, and then they're 7, and then they're 11 and 15 onto infinity. So you just count the waves and know that it could go from 5 to 9 to 13, etc. That's what this one's done. Again, I'd love to see this go up there, but we'll see if that happens. Maybe later today, maybe next week. Okay, that's it for now. Until next time, take care, everyone.